on. Happy to have you guys on here again. Vlad, really appreciate you getting this set up. I know last time I talked to Darren, we covered the whole project. And then he had mentioned during that about, you were the brainchild behind the power token. So Vlad had reached out about having a conversation about the power token. And that's something that I really wanted to do because I want to understand kind of like, the overall structure and the overall mechanics of how you built this, right? Not just what I can necessarily read, but what you can tell me about how this, like the inner workings of this, right? So thanks so much for coming on, and I really appreciate your time.
Pleasure. Thank you for having me.
Yeah, absolutely. You want to, since you weren't here with us last time, do you want to kind of give a little intro about yourself?
Yeah, sure. Very, very brief. This is my 7th year actually working full-time in crypto. I've done crypto like across like all of the verticals. So I started building like banking products which are related to crypto. After that, I moved to building spot and derivative centralized exchanges. Then I was shortly in DeFi, where I really token economics and DeFi is really my passion and what I have been focused on for the past 5 years. So after that, I went for 2.5 years doing VC, investing in various projects across, like, again, all of the verticals. And then when DeFi summer basically started in 2020, I was like, okay, it's time. Let's go back to building. And yeah, connected with Darren, and we were looking at like what is missing in the market, and came out with the idea of IPOR. So that's really very briefly my background.
Yeah, very cool. Wrapped up a lot into a brief statement, but obviously tons of experience there. So, all right, very cool. Yeah, I really appreciate the quality intro, though. Even if brief, really gives a great background on who you are. So, and I apologize if there's like a little bit of background noise in the work building that I'm at where I'm at for my new job for the next handful of months. There's not as much private locations unless I stay up till midnight. So there might be some background noise. I hope it's not too distracting. I apologize.
Nah, no worries. It's very silent.
Okay, perfect. All right. Okay, so first, to kind of lay the groundwork for this, from my understanding with the power tokens, is that it started with you guys trying to some of the liquidity mining problems, and then some of the problems with the V curve design, which was aimed to solve some of those problems as well. So, in your eyes, first, before we dive really into the power token, could you kind of talk a little bit about what liquidity mining is and what like the major issues there are, so that we can kind of like build the structure of why you guys created power token in the first place?
Yeah, sure. So maybe like instead of discussing like really the specifics right now, we can go into like the overall design and the thinking of like what liquidity mining in general is.
Yes, 100%.
So this really goes back to like 2018, yes, when actually in Asia, in the centralized exchanges, we basically had like the concept of transaction fee mining, which was that thing that, okay, we are an exchange, we're going to issue our own exchange token, and then we're going to reward that token to anybody that trades on that exchange. And then there is going to be some utility and some token value capture about this transaction fee mining. And back then that was a massive hit in Asia. But in Europe and in the US, when they were looking at this, they were like, oh, this is so much wash trading, this model is not sustainable, blah, 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 blah. So it was completely discredited from the rest of the world. While in Asia, it basically created exchanges that started trading like $1 billion, which back then was ridiculously high amount, like from 0 to 1 billion in exchange traded volume per day. It was massive, and everybody were all over it here. So later, like 2 years later, we basically come to the point, like 3 years later, yeah, DeFi summer, where actually this transaction fee mining comes back, but this time in the form of, okay, liquidity mining. Yes, a compound, curve, synthetics, obviously first, and then the whole world was like, oh, this is the grail, you know. But this actually is the foundation of like why I was so really how to say enchanted by DeFi and why I'm so passionate of DeFi. The original thinking about DeFi is like we're going to build companies, and then the people that basically contribute to those companies, like I'm going to be a user of Facebook, so I'm going to own a part of Facebook by being a user, by promoting the protocol or the company. So really, it's about like how is a company, decentralized organization in this situation, how it is distributing its basically kind of like you can say its shares. Yes, I don't want to speak here about securities and so on, but at the end, you know, a token represents something that gives you some power or some utility within that decentralized organization. So in the case of IPOR specifically, before going into the specifics of V tokens and power tokens and how they're different, in the case of IPOR, we basically have three things. Yes, we have the IPOR index, which is a public good printed on Ethereum. We have the innovative, basically DeFi primitive, which is on-chain interest rate swaps. And then we have the liquidity pools, which is just people providing liquidity and the TVL of the protocol. And all of those three different segments, yes, you need something that is going to kind of like align the incentives of all of those segments. But at the same time, you know, when you're thinking about creating a public good, yes, when we're talking about the IPOR index, and we say the IPOR index is going to be the benchmark of DeFi. When you have a statement like this, it's extremely important for something that is going to be underpinning the DeFi credit markets to be as decentralized as possible. Yes, so that instantly means that you cannot take advantage of various like Ponzinomics and stuff, like optimizing for price, optimizing for, locking tokens out of circulation. You really need to focus in the long term to have a decentralized protocol where you're going to have multiple hundreds, thousands, tens of thousands of different shareholders, which are guardians of that index. And that is going to be their main role, yes, being guardians of the IPOR index. From that point on, for the liquidity providers themselves, you can think about those people like as Cooperate, which is like a global investment bank, yes, because the liquidity providers are underwriting those interest rate swaps. You can think of IPOR like that investment bank that anybody can go there and ask that bank to basically give him a swap, yes, on some currency, on some stable coin, pay fixed and receive floating or vice versa. So it is extremely important for a protocol when you have like that long-term vision to really make sure that this protocol is not going to be captured by a handful of participants that are just going to go there and basically monopolize it. And after that, consecutively, they are also going to price out everybody else into trying into obtaining a stake in that protocol. So this is the original problem. Yes, how can you do this? How can you do this in the most DeFi native way? How can you do this in the purest way possible? And that's a very complex. It's a very complex problem. Yes, when you are starting from zero, when you don't have any tokens in the space, yes, and you say, okay, I'm going to launch a protocol on day one, and then I'm going to start issuing those tokens. Considering how much money there is in DeFi, yes, how much mercenary farmers there are, accounts holding like hundreds of millions of dollars. If you are only optimizing for who has how much money, and you distribute basically your tokens, yes, your future distribution based on who have put how much money into the protocol, it is way too easy for you to basically fall into the situation where you're just going to be farmed to insanity and dumped to zero, and this is going to affect you. Of course, this is going to affect you. It's very hard to rebound from from those actors basically jumping in on top of your protocol. So I'll stop here.
Yeah, absolutely. Yeah, great breakdown. And definitely one of the things that I was affected by early on, and I think anyone who's gotten into DeFi, I got it kind of at the tail end of DeFi summer when Tomb Forks and all these other things were at the height, right? And I didn't really understand like what I was doing necessarily, right? So I became exactly what you're trying to solve here, which is just exit liquidity, right? Where the bags are getting dumped to zero. And so you have seen this huge shift in multiple ways towards, actually solving decentralization, actually making these things fair for all these different levels of income to be able to enter these protocols and to be able to make money off of them and be profitable while also, protecting the protocol. Because, if we want DeFi to survive, obviously, like you said earlier, no Ponzi-nomics, everything can't just be continued, can't continue to just be giant Ponzi's where the biggest bags get in first and capture all the market share and take advantage of everybody. So I definitely relate to the need for this.
Absolutely. And as someone that, I have been very, very involved in DeFi and tokenomics for what is like 5 years now, a little bit more than 5 years. Like I said, this is my passion. This is all I do all day long. And obviously, I have seen like hundreds, thousands of projects experimenting with different tokenomics, and it's very easy for you to slide down the road of like, I'm going to try to create like tokenomics which are like optimizing for price. Yes, I'm going to make people lock their tokens. I'm going to make people wait for 3 years before they can redeem their tokens. I'm going to make people buy my token before they participate in my protocol, and like stuff like that, which basically is only like optimization for you trying to somehow, artificially keep or pump the price of your token. But this always leads to the same place. Yes, time passes, and whatever guardrails you have put basically start opening one after another, and then you go to zero. And I think that for majority of the projects that we see right now in the space, they don't really care whether they're going to go to zero because they don't have a build window of years ahead. If you are launching some copy paste DEX or some copy paste credit market and just like slapping a token on top of it, you're going to launch it, you're going to pump it after a couple of months. You will dump off on top of your users, and you're just going to go and launch another fork. But if you are truly building something, if you have like a great team and you basically have identified a niche, which is currently right now, in crypto, DeFi markets and rates, like we are in the baby years in DeFi. In terms of like actual finance. Yes, what we know in DeFi, like, and what people do 99% of the time is trade shitcoins on Uniswap, yes, or gamble on some, well, it's kind of the same thing here, like dog coins, fruit coins, and so on. But that's the majority of the activity. But if we actually want DeFi to happen, like decentralized finance, like mimic the financial system, that is not going to happen with us launching 1,000 more spot dexes, which all of them are actually the same copy paste of the same dex with Uniswap. This is going to happen by creating actual financial products. Yes, we are talking about structured products, we are talking about investment products, we are talking about portfolio management, asset management, and so on and so forth. And in this aspect, we are extremely, how to say, immature yet. Even our option markets in crypto, like just taking like the Black-Scholes formula for pricing options. Obviously, it's not working and it's not very efficient. And this is like the most straightforward thing that we can actually build on top of DeFi from like the more complex derivative products. If we are talking about things like credit markets and actually pricing based on actual fair price of demand rather than pricing based on some like utilization curve, which majority of the time has really nothing to do. It's not optimized for what the actual rate should be or what actually people are willing to pay, but it's optimized for having access to liquidity. Yeah, we are really, really early in that. And this is what basically me and Darren were discussing. Yes, it's like, okay, if DeFi is going to be what we want it to be, yes, if it's going to grow and it's going to get crypto like into mainstream, what needs to exist in the space? And obviously, like the world economy runs on credit, which basically is tied to interest rates. As I think that in the past 2 weeks, a lot more people became much more familiar with the importance of interest rates, especially when like banks start falling one after another.
But yes, completely agree with everything you were saying about the immaturity of DeFi, right? And that's something that Darren and I had talked about previously was needing to bring kind of these institutional TradFi type investors, right, to really make DeFi a long-term sticking point, but that was super immature, right? And I think a lot of that could be attributed to the maturity level of the people who are building in the space themselves, right? When you have a bunch of 18, 19-year-old kids who are just coding stuff, looking for the cash grabs, of course, they're not thinking long-term. And so, that was one of the first things that I thought about when I listened to one of your guys's previous interviews with Artemis from Hunting for Alpha. I was like, okay, this is like a huge step forward, right? And then when I started to dig into it and saw the problems that you guys were solving, it was like, okay, these are the type of products that we really need to bring, institutional TradFi type money into the space.
Yeah, and to be honest, maybe it's not only institutional, but I think about it more like we always say, okay, we want to get like 1 million or 10 million more people into DeFi. Okay, but what are those people going to do when they come into DeFi? Yeah, are they going to go and trade fruit coins, or are they going to go and search for actually something that they can do with that crypto that they just acquired from some exchange? Like in the real world, when you have money, you can do stuff with that money. Yes, you can put it into ETFs, you can put it into money markets, you can put it into bonds, and this money is going to be making you money. But in crypto, if somebody comes in right now, let's say your friend just purchased like he just got 10,000 USDC. Yes, he heard that crypto is very hot and he got like 10,000 USDC, and now he is in crypto. What does he do? Do we expect him that he's going to go and trade some like pink stocks, like pink sheets, or do we expect him that he's actually going to go there and basically try to put his money to work? And DeFi is very good at that. Yes, DeFi constantly has a lot of money that is willing to give to people just for doing some action. So let's say easily, yes, if we're talking about like an interest rate swap, right now, if you take variable on, let's say on Aave, if you take the variable rate, that rate is going to be like 2.5%. Yes. If you want to get the stable rate on Aave, that rate is going to be about 8%, your borrowing rate. Yeah. So if I can give you an interest rate swap, which is going to turn your variable rate into fixed rate, how much are you willing to pay for that? Yeah. So if I tell you instead of paying 8% stable rate, why don't you take an interest rate swap and turn your 2.5 variable rate into 2.8 fixed rate? Are you going to be okay with that? Well, as a borrower, most likely. Now, the thing is that the borrower in this situation is the trader. But who is the liquidity provider? The liquidity provider in this situation does not need to be like a sophisticated investor. You know, like when we were designing IPOR, one of my goals was like to create a protocol which is going to be the top place where retail people can park their stable coins. And this is important for two reasons. Yes. First, obviously, if you build a protocol that can generate very attractive yields on stablecoins, well, obviously this is a magnet for you to be able to gain adoption from people which are not, you know, shitcoin traders or perp degens. Yes. If I tell you you can get like 10% on your USDC, well, that's two times more than short-term treasuries right now. A little bit more than 2 times more than short-term treasuries. But I mean, considering what other opportunities you can have in crypto, is probably a very good. It's a very good return. Yes. So that was my original thinking for the IPOR pools. The IPOR pools are going to consist from basically retail people which are parking their stable coins to earn the highest yield possible in DeFi. And since we launched, since last year August when we have launched, we actually have been doing exactly that. Yeah. So the USDC, the USDT, the DAI pools, our real yield in IPOR has been top on any stablecoin. Later, basically a couple of months later or earlier this year in January, we launch our liquidity mining. And even right now, if you go on DeFi Llama and you basically check top APY for stable coins, single-sided, yes, which means there is no impermanent loss risk. There is nothing which is going to stop you from earning your yield, yes. And IPOR basically shows at position number 1, number 2, and number 3. And respectively, it's like number 1 on USDC, number 1 on USDT, and number 1 on DAI. So this was my goal for create, like, who should be the supply side. Now for the demand side, yes, for the traders, there we have the institutions. And how those things feed into each other is that when people basically provide liquidity to IPOR, that money actually does not just sit there in IPOR. That money goes directly to the credit markets. So it enhances the liquidity of the credit markets. Yeah. So the money is going to go to Aave, the money is going to go to Compound, the money is going to go to whichever protocol is basically a constituent of the IPOR index. Now, as we have more money in the credit markets, then that actually allows for bigger players, bigger institutional players to actually come into DeFi, because now they have credit markets, yes, which is very important, believe it or not, for them. And once they get into that, the next thing is like, okay, we have credit markets, but all of those credit markets are basically on variable rate. We cannot do that, yes, because we need to know, for example, how much we're going to be able to earn, or what's going to be our cost of borrowing for an X amount of time in order for us to execute our strategy. So they will need those tools like interest rate swaps to basically hedge their exposure, yes, to reduce their risk and to ensure the profitability of whatever strategies they're going to be to be using, whether they're going to be selling financial products to their own clients or whether they're going to be executing some more complex strategies across DeFi. Yeah. So that was the initial assumption. We first need to increase like drastically the liquidity in DeFi, and once we do that, yes, then we are going to be able to actually attract those bigger players, because right now for them there is nothing to do. You know, like you borrow like 50 million USDT and you basically change the rate with like 5%. That's not something that institutions can engage with.
Yeah, 100% agree. 100% agree. Yeah, I think IPOR solves a lot of those problems for the institutions. Yeah, so I mean, very, very, very cool, project and everything that it's going to bring as DeFi really starts to transition to what people hope it's going to be, right? I mean, I think we're still a long way away from that, but I think projects like this are such a critical step in the right direction. So for specifically within IPOR, well, let's kind of talk about the power token specifically, right? So I know that you guys, this was launched in kind of based off a little bit of what the VE curve design, but to fix kind of some of the issues with that. So what were some of the issues that you guys found with the VE curve design, and then how does the power token improve on those?
Yeah, so a couple of things. First of all, I'm a massive fan of Curve. Yes, like I love Curve. I think that they're one of the best projects ever built. Yeah, everything that they have done is absolutely top notch. But then when it comes to like the Curve token economics, I have always been like a very vocal against like what the incentives of the Curve token economics are, and how it basically like churns people from being able like to participate in the ecosystem of Curve. And later, of course, that got solved with things like when things like Convex got introduced with the infamous Curve wars. Curve established itself as you need to pay Curve rent in order for Curve to basically provide you with the liquidity that you need for your own stable coin which you are issuing. And that's absolutely amazing. Their product market fit is top notch, but that does not mean that their tokenomics are good. Yes, it just means that they created a protocol which everybody else needs. And in this perspective, whatever your token economics are, if you are so important for the space, you're going to be successful. Yeah, but from the token economics themselves per se, like they're heavily skewed towards whales. Yes, extremely heavily skewed towards whales. So, for example, the way that Curve calculates like how you're going to get your boost is it's going to get like what the size of that pool is, and then it's going to tell you, okay, you need to have X amount of V-Curve tokens in order to obtain like your 2.5x increase, yes, multiplier on Curve. But the tricky part of that formula is that the smaller the pool is, the more money, the more amount of V-Curve you need to hold in order to be able to obtain that multiplier. And because basically the V-Curve tokens that you hold are used for multiplier across absolutely all of the pools, what that means is that if you go there as a retail participant in Curve and you put like $10,000 in some Frax pool or whatever, GUSD or LUSD pool, you basically need to have like $110,000 worth of Curve tokens in order to be able to obtain like the 2.5x multiplier. But the whales themselves, they always have much more Curve tokens. So it means that by default, they're going to be getting that multiplier absolutely everywhere, and you are never going to be getting multiplier. So that skews the distribution of Curve very heavily in only one direction. Again, that was a massive problem at the beginning. Later, with the introduction of Convex, this problem got softened a little bit. And by now, to be honest, I don't see much retail already participating in Curve at all. You basically have like what 10 or 20 accounts, which are like 90% of the TVO of Curve. Yes. So this is not something that you can do when you are launching like a brand new protocol. Yes, that's a massive risk to take. You need to be able to say basically, the protocol that I launched is so fucking important that the entire DeFi the entire DeFi ecosystem is going to be dependent on me and is going to pay me that amazing rent because I'm basically providing the liquidity for their stable coins, algorithmic stable coins, whatever, blah, blah, stable coins that they have launched. So again, like me being like very DeFi purist and trying to do things like, starting the protocol from zero and building it up and trying to distribute those tokens in the fairest way possible, implementing something like this basically risks the future of the entire protocol. Yeah, so it's obviously not something that I'm willing to gamble on, and this is reflected in the token economics and the power token itself. So those are some of the problems that basically I identified with Curve, and of course the major one being, in order to obtain any form of multiplier there, you need to lock your tokens for 4 years, yeah, which is absolutely ridiculous in DeFi land. Yes, 4 years is like 40 years in traditional. Yes, so you can as well just market those tokens to zero at that point if you are locking something for 4 years in DeFi.
Oh yeah, I've got plenty of tokens that I locked early on for 4 years that I will never see the money come back from that.
No, you will never. I can guarantee you. Sorry to say, but yeah. So that's the thing. I wanted to also avoid like the requirement of people to need to lock for years ahead in order to be able to align the incentives. And the other thing that I wanted to avoid is to like artificially suffocate the market from supply of tokens. Yes. So to create like any form of, I'm going to give you tokens, but you can only redeem them after 1 year or something like this. Or I'm going to give you tokens, but in order to redeem them, you need to pay me X amount of money. So then you're going to get the tokens and then you can sell them. All those things again are like, they're constructs that they are optimizing for price. But if you are talking about like a real DeFi protocol, you are not optimizing for price. You're optimizing for distribution of power. The price is going to come with the utility of your protocol. When you are providing real value to the ecosystem, then people are going to price you based on the value that you are providing, not based on your artificial supply chokes that you are putting there on the token and creating those like massive pumps and dumps. And again, this sounds very simple when you say it out loud, but when you need to design it, it becomes quite complex very fast. So it took me about 9 months to come out with like, well, yeah, actually about 9 months to come out with the power token design, which basically takes everything from what I have seen across hundreds of projects and try to make a design which is going to be suitable for IPOR specifically. Only later on, I realized that there is such a great need in the space for like modular tokenomics, like tokenomics that basically can be developed and evolved together with the growth of the protocol, that basically me and developers were saying, okay, maybe this needs to actually be open sourced, so more people can take advantage of what we have built. Because the power token design really is, first of all, it's modular, which means that the different, like your boost is different from your dividends, is different from your voting power, it's different from, you can create like a module for every single aspect of the token. And that module has its own independent logic. Yeah. So this gives like a very big flexibility in terms of like how you can build on top of this. And on the second one is like the issuance. Yes. The way that the boost and the issuance of the token is being built is that you actually change the curvature of that issuance. Yes, you change, like, for example, the strength of the Power IPOR token when we are talking about the multiplier through time. Yes, so at the beginning, when you launch, you really want to protect yourself from being able to be monopolized by a couple of actors. As soon as you have distributed that X amount of tokens, you can now change the curvature and be like, okay, I can apply actually higher weight to people that have Power IPOR in terms of like what is the boost that they're going to be able to obtain. And then you grow a little bit more and you can start doing things like, okay, now I can make people choose whether you want to obtain that boost, whether you want to get like dividends from the protocol, whether you want to have both, you know. So this is something that, like, in general, I see majority of the projects continuing to do the same thing. Yes, almost everybody, like launching a credit market or a DEX or whatnot, are going to go around and be like, oh yeah, we have V tokenomics. Come here and lock for 4 years or 1 year. Now they started reducing the amount of time, yes, because obviously too many people marketed their 4-year locks to zero. So now they're more cautious about it. But now the latest trend is like, yeah, I'm going to give you those tokens as like APR. Yeah, so you're going to get 70% APR on those tokens, but in order to be able to trade them, you need to vest them like over 1 year. Yeah, so again, like your 70% APR is probably not going to be 70% after 1 year of vesting. Yes, so yeah, this is it's very interesting. It's very interesting, and I try to promote it to more protocols. Actually, we have gotten like quite a good reception of the Power tokens, and now as we basically are proving that this tokenomics is much better than anything else that we have on the market, and I guess we're proving it by being, again, number one on every stable coin for the past couple of months. Yes. Even though we are a brand new protocol, I hope that more people are just going to look seriously into it and they're going to start applying like more sensible tokenomics to their DeFi projects, because I'm seriously sick of seeing like Ponzi-nomics left and right, like every fucking where.
Yeah, I mean, I completely agree, and I think everyone in DeFi can attest to how kind of tired they are of Ponzi-nomics, except the malicious actors, right? They're looking for that. They want that. And I know, so for those people, they're, you know, the joys of DeFi summer when they could, you know, make a ton of money off the backs of people who were just, you know, hoping to ride a good project to, you know, a little bit of money. Instead, they lost it all. I think I agree. Everybody's kind of tired of that. So what I'm interested in here too, right, is you talk about, you know, all these, you know, projects that aren't, you know, with the governance style that they use, with the lock token style, and how you want more projects to use this is what type of projects are there, or do we currently have that would benefit the most, and then what kind of projects do you think that, you know, that could be built on this that would benefit the most?
Well, in terms of like benefiting from the token economics, like from the Power token design, to be honest, like any DeFi project that is launching right now and does not want to go the Ponzi-nomic route is going to benefit from basically using Power tokens. You know, the code is very good. The description, like everything is created just so you can take it and really just fix it to your own personal needs of your own protocol, and then just you just nurture it as you start doing it, and then as your protocol grows and evolves, you basically modify those different modules to really fit to your scenario, as to your own protocol. Yeah. So anybody that is considering launching a token right now should seriously look into power tokens and like the design that IPOR have created for liquidity mining, because we have proven that we are the top in that space.
Yeah, yeah, completely agree. And you kind of do see some of these shifts, right, in how people are locking their tokens, whether they're, having the maturity curves and not necessarily, with the same model that you guys are, but there is that shift. But I think that this is, well ahead of what most of the, kind of typical DeFi, projects are using. Even, some of these three models that you see, they are incorporating these new type of, locking methods and making the positions liquid, and you can have a maturity up to 6 weeks and minimal locking. And I think that's great for certain projects, but it doesn't solve kind of the problems that you guys are able to solve here. So
Yeah, and something which is like very rarely spoke about in DeFi, I guess, because like nobody has like the incentives to speak about it, to be honest. But if we're talking about like token distribution, like what does token distribution means? Like considering that you give a set amount of tokens to the investors, you give the set amount of tokens to the team. What token distribution, tokens issuance, and inflation is basically solving for how long of time needs to pass before my project is sufficiently decentralized from the insiders. Yes, and insiders, I basically talk about like team and investors. Yes, so those vesting periods. Yes, like the vesting period for the team, the vesting period of the investors. Those are basically your how to say, like, those are like your deadlines for, okay, they're going to vest for, let's say, 3 or 4 years. By the time they are fully vested, yes, what percent of the protocol are actually they going to be able to control? Am I going to build my issuance in a way that I will allow, basically, I will distribute enough of my token in the next 3 years that when everybody are vested, I'm actually going to have a decentralized protocol rather than a protocol which is like owned 80% from team and investors. So like solving for decentralization, yes, for that issuance is also like a very important aspect of token economics, which nobody is really talking about. But again, that's normal. Again, like it's money, so obviously people do not have the incentive about speaking about those things. The VCs do not have the incentives, the projects do not have the incentives, and I guess that the retail they only speak about it post factum. Yes, when somebody goes there and start like swaying the governance vote by clicking one button, like yes I approve or no I don't approve, then they start whining, oh, this is so centralized. But didn't you look at the beginning that this is what you are signing up for? There is a token distribution there. There is token mechanics. You can calculate like whether this is going to be centralized or decentralized after X amount of time. Don't whine like 2 years later post factum.
yeah, I mean, well, how many of the people who read these actually, some of these, how many of them actually truly understand, right? They're looking at initial distribution, get a bunch of fees up front, and they think it's going to last for forever because they don't do like a typical, don't do some basic math like you said and do some modeling out long term to see how this is actually going to affect them as, where you guys have a, your reward curve, right, which is increasing with maturity and ever increasing, right? But that doesn't happen with these other projects. So how how can you sustain that type of income from those different models, right? From locking those different models, right? If there's no way for that to continue to grow. Does that make sense what I said?
Oh, sorry, I was muted. Partly, yeah. What I was really implying to, well, kind of like retail in general, they do not really care that much because like when they look at token economics, they're like, okay, if I buy this now, can I sell it for $3 or 3x or 5x later?
Mm-hmm.
Yes, and that's how much they look. That's the depth to which they reach when they're looking at token economics. Almost nobody is really looking at like, okay, 2 years down the line, 3 years down the line, what are going to be the power dynamics of this protocol? If this protocol is actually so important, you know, what part of it, like how much of it is actually going to be decentralized? So and by the time this protocol becomes so important and people actually start whining about it, it's already too late.
Mm-hmm.
And nothing really can be done. So we are basically left with those like giga protocols out there that are completely centralized. Yeah, there is like not a sliver of decentralization in them. And this comes like when I speak about decentralization, I don't only speak about decentralization in terms of governance, I speak in terms of like decentralization in terms of like value capture. Like very few people actually, they see like the high APRs of, okay, you single site stake your tokens here, and you're going to be receiving 70% APR from real yield from fees of that protocol. But very few people see that half of those 70% or 70% out of those 70% are actually going to the same people. Like nobody looks at that.
Mm-hmm.
So, well, it's a problem that we have, and we have always had it. Token economics is one of the least explored part of DeFi, really. Like this is the place where we can have like the biggest jump, like really 0 to 1 moment, because on the infrastructure side, it's more like of a tech thing, which like as time passes, it's always going to get better. Yes, we are not going to go worse than XYK on Uniswap. Yeah, we have already conquered that hill. From here on, we can only optimize on top of that. With the credit markets, it's kind of the same thing. Soon enough, they're going to understand that, if they want to keep existing, they will need to start making changes to how they're pricing for interest. With token economics, though, it's because it's so much more dear to people in terms of like, oh, is this token economics going to make like my token 5x or 10x or 20x? So we don't really grow in terms of like devising better token economics in crypto. We just grow more sophisticated in creating like better Ponzi-nomics in crypto, which is very sad. I really wish that we can have like a reset button on this and go a little bit back to the basic and start thinking from first principles what a decentralized and autonomous organization should look like. And how is that organization going to distribute the value that it is creating to the different type of shareholders?
Mm-hmm. Yeah, I agree, especially with the DAO point, right? Because I don't think that we really have a great grasp of what a DAO is supposed to be. I think for the most part, with a lot of DeFi protocols, at least personally, is what I think is a DAO is just a way for them to shift blame legally. You know what I mean? Oh, we're a DAO, so if anything goes wrong, we can't, like, one person can't be held to account. So I think that's a major problem for something else that needs to be solved in a different way. But for 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 adoption of what you guys have built, right? So in order to kind of, we can shift tokenomics and we can shift all these different things, right? But what we're trying, conversations that you hear in other realms is how do we incentivize behavior, right? So how do we shift the mindset and incentivize those behaviors to start actually using the products like yours that are actually going to lead us to a point where DeFi is widely accepted and people actually see the real long-term value and capabilities here.
I mean, I, I don't think that you can force people to do something. I don't think that you can force people, to use some products. I think that this is going to be something which is like evolving naturally, and I like. Okay, so we were in a situation just like a couple of months ago that we kind of were like in the depths of, some would call it like a bear market. Yes, everything was looking quite bad, especially after FTX, and then we kind of saw this like back to the basic thinking when people started to speak about like protocol revenues and actually whether those protocols are sustainable, are going to sustain themselves through time. People started speaking more about like, with the Uniswap and other stuff. They started speaking more about decentralization, but that of course is like when the bear market is like the deepest. Yes, as soon as we jump a little bit, we go back into like, oh, let's degen here, like 150 different projects on top of Arbitrum, which are all inventing some like, delta hedging strategies that nobody really understands or uses, but it's bull market. It's time to like throw money left and right and hope to hit something. But it's cycles. Yes, like I know that while we are while everybody are hyper optimistic, 90% of the people are going to be engaged and they're not going to be thinking about how to build better DeFi. Then when something bad happens and we go back into build mode, we are going to be creating like those protocols that are actually going to be scaling and DeFi, yes, and actually making it more accessible from the outside. The good thing is that there are plenty of teams. There are plenty of teams that are building very complex protocols that you are not going to see them spoken about too much on crypto Twitter, but they just sit there and they're silently building, And as we have seen, like through all the hype that happens, through all the hype cycles, the FOMO pump bullshit basically goes up and then dies, and then you have like the actual infrastructure which is powering that entire economy remaining there and becoming stronger and becoming bigger. And I think that especially now with what happened with obviously the banking system, the financial system, a lot more people are going to start speaking things like, okay, the financial system is rugged. I'm putting my money in the bank. Somebody's taking my money or losing my money for some reason. There is absolutely no transparency. Somehow, even though those banks are like public companies and like you have a gazillion eyes looking on top of their books like all the fucking time, but it's kind of like, oh, it's always like surprise, because I'm from Bulgaria, and in Bulgaria we have like a very bad infrastructure, and every single time when there is like a little bit heavier snow that falls, and there is like massive traffic, and nobody can clean the snow from the roads. So the running joke there is like, okay, it's like the snow surprised us. How can you be surprised from snow when it's like January or February? That it's a given that there is going to be snow. How can it surprise you? But again, like the financial system, every single time something like this happens, like, oh, how surprising. Well, it's in front of your eyes the whole time. Just go and fucking check it, you know. Well, and in this particular field, I think that DeFi is just much better. Yes, because in DeFi, at least we have learned to check things on chain. Yes, there is some like here transparency is actually how to say, people are actually looking at the stuff which is public, rather than just having transparency, but nobody seems to look at it. So yeah, the short question is, it is going to take time. It is going to run through cycles. But if crypto is to be something in the future, it will inevitably need to happen. If it doesn't happen, we are just going to be trading shitcoins for the next decade, which is obviously not where I want to be.
Yeah, I agree because I'm terrible at trading shitcoins. So I would like to be able to actually park my money somewhere where it can make money. But I think it's kind of almost as simple as if you build it, eventually they will come. So getting it out there was definitely like the first step, right? And giving people visibility of what can be built and seeing it be built, I think is the key step in starting that transition of mindset in the long run.
Yeah, and I mean, I don't want to fall back to that thing like if you build it, they will come, because that's not the way that I'm thinking about, like, for example, what we are building. It's just that, trying to move like the centralized financial system to a decentralized algorithmic based system is extremely difficult. It's just what it is. It's very, very complex. Like if you go right now, to any bank anywhere, and you go and you're like, okay, I just took a mortgage. I want to change my variable rate on my mortgage for a fixed rate. Any banker in front of you is going to basically have like one book in one Excel spreadsheet, and is going to tell you after like less than 10 minutes, no matter how good his experience is, he's going to quote you a price at which they're going to exchange that variable for fixed rate, and in a way it's very simple. If you need to do this in an algorithmic way, via a smart contract that literally does not have a clue of what's happening outside of its own logic, then that problem becomes much bigger. Yes, and you actually need like 10 people, PhDs, which are like 50 times smarter and more capable than that one banker, to just be able to code the logic which is going to allow you to exchange your variable rate for fixed using a smart contract. So it is what it is. It is just very difficult to build. So that's why, it takes time. And I guess the pace of like the maturation of the industry, together with the development of those more complex like financial instruments, is kind of going to be like at the same pace. Yes, it's very hard to rush things.
Yeah, I mean that makes sense. I mean, even though everything in DeFi does feel extremely fast, I think in the grand scheme of things, it's some of this stuff is, like you said, it's complicated and it's going to take a lot of time.
Yeah, building DeFi primitives is definitely not fast. It takes years. It takes years. I mean, Uniswap took years before we had it. Yeah, Aave and Compound took years, and they're like the most primitive of primitive. Yes, like the simplest instruments that we have in DeFi. Like talking about something more complex than that, you can imagine it's a lot of effort. Surely we now understand Solidity much better. The industry really have evolved a lot from like what it was the last 3-4 years. So that gives us the ability to build faster, but still the complexity is there. And also not only the complexity, but like when we are talking about finance is an interconnected thing. Yes, like people constantly talk like composability in DeFi, blah blah. Well, it's the same in finance. Yes, if you want to build one product, you are dependent on what is the actual infrastructure that you can use in order to create that product. And when your infrastructure is super basic, it's hard to build like a sophisticated product based on that very basic and crude infrastructure. So all of those things are going to evolve and become more sophisticated through time, and this is what is going to allow us to basically scale DeFi. Well, sorry if it does not sound that optimistic, but kind of is the reality.
Yeah, I mean, but you have to be realistic, right? So it makes sense. And so one thing that I'm kind of wondering, right, is from my previous conversation with Darren, I'd asked him kind of, with this being on ETH mainnet, and this was generally like a lot of these conversations with you guys is a ton of learning for me, right? Because this is extremely high level, from the perspective that you guys have of what you're trying to build and where you're looking forward. Obviously, this is years of experience in financial markets and seeing where things can go. How scalable is this? Because he was telling me that they're looking for those big investors, with the types of money where a transaction fee on ETH doesn't really matter, right? But how scalable is this down to the smaller teams that are trying to build, right, into smaller projects? How scalable is this technology down to their level?
Uh, that's a good question. To be honest, like there are plenty of things that if you're planning to build, if your average customer is going to be somebody with like 50 or 100 or $200, you definitely should avoid Ethereum. Yes, and you should go somewhere else. In general, finance is not one of those. Yeah, like whenever we are talking about like credit markets and interest rates, the main players on those protocols are massive. Yes, they possess tens of millions, hundreds of millions of dollars sometimes. They don't really care about what the Ethereum transaction fee is going to be. So to this, really, it is like it really is dependent on like what you're building. And for example, a protocol integrating with IPOR and let's say taking interest rate swaps on IPOR is probably not going to be doing that for a portfolio of exposure of like a couple of $100,000. Yes, like when we are talking about yield aggregators and DAO treasuries, the majority of times we are talking about like tens of millions of dollars. Yeah, so this is like, I would say, like the main users. For the new teams building, I guess like that the silver lining in the whole thing is that if you're building something innovative and you can survive on Ethereum, that means that you can be very successful. You can pat yourself on the back, like, oh, I built something in DeFi and it was not exploited, hacked, or otherwise wrecked in the most like dangerous environment that we have in crypto. So just think a little bit long term. You're gaining like invaluable feedback and hundreds of thousands of people trying to wreck your idea. So if you manage to survive through that, just amazing. Of course, you can go and you can launch on some like out chain, where maybe nobody is going to be looking, or maybe you're going to get like a couple of degens. But if you want to scale, if you really want to scale, it kind of like Ethereum is the place. Yes. We have seen like that FOMO rotating between like multiple chains right now. We saw it with AVAX, we saw it with Phantom, we saw it with BSC. And the reality is that if you look at like actual adoption of protocols at a scale, we we don't we don't have that much. I would say, of course, outside of GMX on top of Arbitrum, but I guess we only have like two perp protocols in crypto. Yes, like we have GMX and GYDX. So I guess, if you build a very good DeFi perp protocol, well deserved that you're going to get adoption. But I still think that Ethereum is the place where DeFi is going to happen. And once we manage to scale up DeFi on Ethereum, then probably we're going to move out to like, okay, how can we optimize it? But we still have not reached one. In the from 0 to 1, I don't think that we have still reached one with DeFi. Once we reach one, let's see after that how we can scale that to 10 or 100.
Yeah, yeah, I agree. I think that Ethereum is the key to mass adoption. And like you said, this isn't tailored for degens, right? And I think the vast majority of everything else on every other chain is, current, smaller retail degen type people, and that's not really going to drive us forward. So I just kind of wondering what you're thinking there was on how this would be able to be scaled eventually. But, obviously, Ethereum being almost $30 billion versus, Arbitrum's the new hotness right now, right? So, but I think Arbitrum's at like 1 billion TVL or something like that. So obviously not even in the same ballpark.
Yeah, absolutely, absolutely. If we're talking about like building actual products for people to use, you need like the economy. You need the big economy in order to create products that are scalable.
Mm-hmm. Yeah, completely agree. All right, well that kind of covers the things I had. I know we got kind of off topic necessarily just from the power token conversation. I think you had covered that like super well, and early on with just kind of how everything worked within that. I know we talked about a whole lot more stuff than just the power token, but is there anything else, kind of in relation to the power token or anything within IPOR that you want to cover?
Well, to be honest, like without trying to sound silly or something, like outside of being like the top yield protocol for stable single-sided liquidity, the power token design, like the boost mechanics, how do you obtain boost and stuff, it's like extremely beautiful design. So like, and it is specifically tailored for like retail whales, not for people with millions of dollars. It specifically is tailored to be the best place for somebody that has like 5K, 10K, 20K of stables, which are just sitting in his wallet. And in a way, like you can go there, and while others are earning, of the distribution of the IPOR token is beautiful. And as I said, specifically tailored for those like smaller, medium liquidity providers. So just go out and try it. It's very hard to explain. It's a little bit like the Matrix. Yeah. Too much thought have come into it, so that also makes it a little bit difficult to be explained with like one or two sentences. Just go and spend like $5-10 on Ethereum transaction fees, and you're going to experience it for yourself.
Yeah, I shill away. I think it's definitely worth people's time to actually, kind of introduce themselves to this. Just, when you're looking at, some of the modeling that you guys have put out there, it is definitely the best option, for that long-term growth. I mean, and it's clear, just from how quickly you guys have kind of captured the market and taken off so quickly that, people are really, really starting to notice. So yeah, I mean, it's hard to argue with your numbers.
Yeah, the other thing is that in terms of like, you know, token distribution and like circulating token and Power IPOR token, just yesterday we launched like a brand new dashboard on the website. So you can actually go to like the app.ipor.io. You can go to like IPOR info tab on the left side, and you are going to see through time, basically the circulating amount of IPOR tokens, how much IPOR tokens have been staked for Power IPOR, and also like the protocol owned liquidity on DEXs, which I think it's like a very beautiful chart there, and really brings into perspective like the power dynamics and the importance of Power token, of Power IPOR for the protocol and for the liquidity providers. So definitely go and check that out. This is alpha. You know, if you look at the chart and just look at the chart, and you're going to be able to extract the alpha yourself. Yeah, I'm not going to give hints here.
Yeah, I've been clicking through this entire for the majority of the conversation, clicking through the dashboard and doing some like comparisons and just looking at it, and it's pretty impressive. Well, one the dashboard's impressive. It looks really good, by the way, just from a tech and UI perspective. But yeah, there's a ton of really good information in here. So yeah, everybody should definitely. Yeah, it is definitely alpha. I agree.
Thank you, sir. Thank you. Let's not give them too many hints.
Okay, yeah.
And tomorrow we are listing on a centralized exchange, by the way. For whoever is a fan of centralized exchanges, I don't think that many people here are, because I think that majority of us are DeFi native. But centralized exchanges have also their place in the world. You know, they expose DeFi protocols to an audience that usually would not be able to discover them unless they are called like a Doji Inu Shiba something.
Mm-hmm.
So that's also good. Yes, we should take more advantage of this, because there are plenty of people that care about crypto, but not that many of them that care about DeFi. You know, we are a little bit in like an echo bubble on crypto Twitter, the people which are passionate about DeFi, but the vast majority of crypto users still is, you know, trading bullshit on centralized exchanges. And we should even start bringing those people in before we even look outside, you know, for bringing, you know, traditional people into the industry.
Yeah, I mean, yeah, you definitely want the people who, actually believe in what DeFi is supposed to be to come in first, so that the people who've been around for it all and experience some of the ups and downs, can get the most value out of it for sure. But it's a double-edged sword, like you said there with the centralized exchanges, because everyone, we hate on centralized exchanges because some of the things that have happened, but then when you get into conversations with projects, it's like, okay, well, when are you going to be listed here? When are you going to be listed here? Okay, now you're listed on Dex Screener. How do we, and then once a chain, it's like, well, when do we get, everybody's talking about when do we get Phantom on Coinbase, right? Because that's going to make it explode. But they are, whether we like them or not, it's a necessary evil to have for the mass adoption.
Well, I mean, centralized exchanges, you know, they play a very good role, but majority of them are not going to have like a business model which is going to sustain them, you know, outside of the biggest ones, yes, Coinbase, Binance, and so on. What I really see as the future of centralized exchanges is actually bridges, because that should be their business model. Bridges on chain are very scary and very difficult. A centralized exchange is the perfect bridge. You know, you basically, whether you're going to go through some whatever bridge between Ethereum and Solana, or Ethereum and Polygon, or whatever, all of those things are centralized as fuck. It's a multi-sig with couple of people that basically have control over that bridge. We only have like one or two bridges which are like decentralized by design. Yes. So if you're going to go there and move your money through a centralized bridge, well, you can as well use a centralized exchange and use that exchange as the bridge, and the exchange is going to provide you that service in a much more user-friendly manner, and you are going to be able to move your coins from here to there and participate in DeFi on different chains. And also, like I said, DeFi always has money on the table, which is willing to give to participants. If centralized exchanges manages to capture that for their users, that's only to their benefit, because again, like people think that exchanges make a lot of money, like centralized exchanges make a lot of money, but that's not really not true. Majority of them barely make money from the trading, because like when you see that trading, majority of that trading is like market makers with like extremely low fees or some products, protocols, etc., with zero fees. So it's very difficult for centralized exchanges to actually make money. Majority of the time when they make money, they're like some form of dodgy centralized exchanges, like third tier, which are, using their clients' money to do something else or just stealing from them blatantly. Yeah. So, we have a lot of those. We have thousands of centralized exchanges without a business model. So DeFi is a very good place for them to evolve to be that bridge for the normal user to participate in DeFi. How they're going to do it, their own problem. But yeah, if they want to survive, they're going to go through that one way or another.
Yep, gonna have to. That's one of the biggest things that I've had multiple conversations with quite a few people about the lack of business models and business savvy within DeFi, right? And there's a ton of projects that are just built by people who don't understand business and how to build a model that's going to be sustainable in a business sense, not just a sustainable quote unquote tokenomics sense, but how do you run it as a real business? So yeah, I agree. People are gonna have to learn if they want to survive.
Well, on that happy note about the downfall of centralized exchanges and turning them into DeFi bridges, yeah.
I think that's a great place for them to go.
Yeah.
Yeah. So I mean, and I think unless you have any like last parting words, that really covers everything for me as far as what I had to talk about. I know we talked about a whole bunch of different things, but yeah, that's it for me.
Nah, I just want thank you. Like we really had a very nice time, amazing conversation, and like for the people that still have not discovered IPOR, you are missing out on a fucking lot. So just go and check what it's all about. That's about it.
Yeah, hey, it really was. It was an awesome conversation for me, especially, last time I talked to Darren, this time I talked to you. I've gotten to learn so much, just, learning about the project, right, obviously, but, just the way that you guys view things and the way that you guys are thinking, for the long term of DeFi, financial infrastructure, the business sense that you guys have. And just in your approach has just been such a great learning experience for me as I assess like other projects within the DeFi space, being able to talk to real, savvy builders who understand what needs to happen for this to go forward has just been, really, truly great for me. And I really appreciate your guys' willingness to come on here and talk to me and, give me the stage and give me your time, but, give me the knowledge and the experience of talking to you. And it's truly humbling and truly appreciative.
Thank you, sir. Likewise. Thanks for the amazing questions and the amazing conversation. And yeah, we just keep building. I hope that we're going to have opportunities in the futures to catch up again.
Absolutely.
Update you on some progress and how DeFi is going.
Absolutely. I look forward to it.
All right.
All right. Have a good night.
Cheers, sir.
Thank you so much. All right, everyone. Thanks so much for tuning in again. tuning in again. Really appreciate your time and support. Couldn't do this without you. If you're hearing this now on YouTube for the first time, please hit that like and subscribe and follow IPOR Labs socials. Once again, I'm Relentless from DeFi Raiders, and we'll see you next time.